I'm joined by Eric Bolton, Chairman and CEO of MAA. So, Eric, in terms of MAA's capital recycling strategy, is it a better time to be tilted towards buying or selling in the multifamily sector?
Well, certainly the selling environment has been better for the last couple of years, really. But I really think that things perhaps are maybe starting to change a little bit as a consequence of both supply coming into the market. I think there is a growing prospect of rising interest rates, which has really put the higher leverage buyers at an advantage over many of the REITs. So I'm optimistic. I think that over the coming year we may see the environment for being a buyer start to improve just ever so slightly.
Now, it appears as though leasing still remains pretty solid for MAA, but are there any signs maybe of forthcoming softness in the market out there?
Well, I would think that with the level of supply that has come into the market over the last 6 to 12 months, it's reasonable to expect that we may begin to see a little moderation into next year. I think, though, that the trends that we're seeing still are running well above historic averages, long-term historic averages, and as a consequence of that, we think the fundamentals are going to continue to hold up reasonably well across our Southeast Sunbelt footprint, particularly the balance that we have in both large secondary markets, both suburban and inner city locations or inner loop locations. We think that on balance, we would expect to continue to see pretty good trends next year.
And that supply, are you worried about all the new development coming online in the market?
Well, I think that, again, there's pockets of it, and I think you have to look at various submarkets to really judge broadly whether there's too much supply. But based on what we are seeing, as long as the job growth trends continue to show steady trends, steady improvement, and I'm optimistic that with the elections that just wrapped up, that we may very well begin to see some things take place from Congress that become more of a stimulus to the economy, driving job growth, which I think really translates into pretty good demand level for apartment housing.
And so what can we expect from MAA in terms of new development?
Well, we're, as you may know, I mean, we're in the process of going through a merger right now with Post Properties, and we're inheriting a fairly meaningful development pipeline through that merger. And as a consequence of that, we think going into next year that our focus will really be bringing that pipeline online to full productivity next year and into early 2018. We're going to continue to be observant for opportunities. I think with land costs really being what they are, construction costs being what they are, we found it difficult to really rationalize a lot more start right now. But I think that as we continue to perhaps see some pullback, that there very well could be some opportunities that start to emerge next year that would be more pointing towards delivery in late 2018, perhaps 2019. So, we're going to stay observant of what's happening right now, but unlikely to start much new over the next 12 months.
Well, Eric, thank you so much for your time.
Thank you.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.